Sensex is seeing the sharpest cut right now. It's down 0.9%.
Clearly, inflation has to continue to moderate, and the Fed, in that context, should deliver one more rate hike in September and then pause to see where we are.
Even the 5-day exponential moving average and the 10-day exponential moving average are very stretched. We closed below the 5-day exponential moving average. The next level to watch is the 10-day exponential moving average. Where does that come in? 17,645. That is where perhaps the Nifty may attempt a recovery. The 20-day exponential moving average is 17,317.
Do you think there's a downside risk for a correction within that range that you've seen year to date?
Mr. has decided to move the stock Piramal Enterprises to the small cap index from the standard index.
The first rates are in. The Nifty is down about 78 points.
It has to take a little bit of respite and even correct a little bit.
Reason for Adani Power to acquire DB Corp's thermal assets is it will help Adani Power expand its offerings and operations in the thermal power sector in the state of Chhattisgarh.
We are in the process of compiling the data, but in any case, as I look at it, it will not cross 2 to 3% of our year's turnover.
Right now, actually, the markets are at the day's low. It's a 225-point cut on the Nifty.
Okay, that's the day so far. Welcome to Closing Bell. I'm Anuj with me, Prashant and Nigel, and we have a market on Monday which is eerily similar to what happened on Friday, which is the Nifty down about 200 points. The Bank Nifty leading that decline, 620 points. Second day of big losses, as I said. The Nifty is trading now below that 10-day exponential moving average of 17,645, and the 20-day comes in at 17,317. Second day running, and that's the disappointing point for the bulls. We discussed in Editors Roundtable, the decline being led by Bank Nifty, which has so far been the stronger index. That's leading the decline, and in 2 days we have seen 3% decline. All of this is emanating from the global market, Nasdaq, and of course dollar index. The dollar index is almost at its recent high. The euro is back below parity versus the dollar. And back home, of course, it's Brent's decline, which has sort of prevented the rupee from hitting 80. It's still at 79.90. But the way the global winds are blowing, and we discussed this in the morning as well, purely technically looking at the charts and that line, the trend line and the 200-day moving average for Nasdaq, all of this is coming together to perhaps indicate that perhaps for the time being we are in for some decent correction. But let's see what the last brings for us. Gentlemen, hi, good afternoon.
Anuj, hi. Nigel, hi. We're not used to corrections anymore, aren't we? I mean, the temptation, of course, the impulse has been to buy the dip, but one of these materializes, of course. But I would say this, I mean, this has been perhaps one of the most widely anticipated pullbacks because, I mean, we've been talking about it, and I think generally people have been kind of being cognizant that the market was very, very overstretched, and overstretched can remain overstretched, and sometimes it pulls back. So we're in the latter phase, which is in the midst of a bit of a pullback. Globally, the dollar is making a move. We highlighted this on Friday. And of course, I mean, it's, by the way, for the dollar, which went up almost 3% week on week, last week that is, it was the best weekly performance since, a week in March of 2020, when there was complete mayhem, risk aversion, and the dollar shot up. So, pretty large move. And I think that's going to be important to track. The other is oil, which is also something we highlighted, that oil prices seem to be starting to come alive. We had Lawrence Blanco weighing in on both, kind of pretty much agreeing with that maybe, oil's headed to Brent, that is, to about 115. And the dollar is also looking like it's starting to make a move. How high, of course, is anyone's guess. Will be wiser in hindsight, but the direction seems to be up right now. 208 points lower, 17,550. Nigel, hi.
Well, Prashant, the last part that you made about the dollar index, that's moving to around that 108.5 odd, and the rupee as well, that's headed towards 80. For me, that's a bit of a risk out there, and that's giving you that bit of an eerie feeling, in terms of the markets as well, because that cooled down considerably. Both the Indian rupee, that pullback to sub that 79, or the dollar index as well went all the way to around 105.5 odd, and from there it's made that spike up to around 108.5 odd. So I think the currency space as well is going to be rather crucial. And at the end of today, the FI flows as well, they came down to around 1,100 crores odd. We were getting used to a number closer to around 2,000 crores. So I'll be tracking that rather closely. First up though, before we get to our market guests, let's run you through what we have lined up on the show for you. It's the second day of cuts on bourses, with the Nifty and the Sensex both trading with cuts of a little over 1%. The broader markets are underperformers of the day, while banks, autos and metals, they drag further. The steel pack is in focus on the back of a cautious Credit Suisse note from the sector. We'll get you details in just a bit. And finally, we'll discuss the way forward for the markets and discuss top folio bets with Nilotpal Sahai of HSBC Global Asset Management.
Okay, but as always, we start the show with last hour calls. So how should you position yourself for that? We have Mitesh Thakkar joining us. Mitesh, good afternoon. Serious fall in the bank Nifty over the last couple of days. Nifty as well. Your thoughts and your last hour calls.
That's right, Anuj. I think, we've been calling for this pullback, and now that it started, I think we saw that movement, taking place on Friday, and then today we are seeing some continuation. I've talked about 17,550 as the first level, maybe 17,420 as the next support area. So I think maybe we are heading towards that because we've been trading around this 17,550 mark for some time now, and there's no sign of a bounce back. So a stronger possibility that I think 17,420 at least should be tested. Whether we'll go below that, we'll possibly take a call tomorrow. But for the timing, that's the first support area which traders can look at. And on the stock side, Intellect software, that's I think a sell call that's breaking down. So sell with the stop at about levels of 605 and a target of around 560 on the downside can be looked at. While Nestle is on the buy side, that's a stock which is kind of holding out well in the market, which is slightly weak, and the intraday charts are slightly improving. So buy here, keep a stop around 19,450 and a target of around 20,000 on the upside can be looked at.
All right, Mitesh, thanks very much. Good speaking with you. Appreciate you joining in with that perspective, those trades as well. We'll come back in a bit from now. Deepak Shenoy is founder of Capital Mind. He's joining us to take some questions. Deepak, great to have you with us here on the program. Thanks very much. We're in the midst of a bit of a pullback. Just a quick word on what you make of the market at this stage. Did it stretch too far on one side? Were you expecting this? How far? Any thoughts near term?
Thanks, Prashant. I think, firstly, I didn't expect this. I don't think it'll be fair for me to say I've expected this. But, markets are designed to overstretch in either direction. So they'll fall a little too much. They'll go up a little too much. I think part of this going up process was the global recovery, which is when, markets all over the world started to recover. And part of that recovery process was where India also kind of benefited from it. We saw FII flows reverse. This last 2 days of a fall, at least today, we don't see the USD INR hurting quite as much as perhaps some of the other currencies are. So it seems to be relatively benign on the USD INR front, but it's possible that some part of this was MSCI rebalancing expectations in certain banks. We've seen a few other, the lack of positive news flow that possibly highlighted most of last month because we had a fairly good earnings season, reasonable earnings season this time. I think all of that put together, we're just coming, it's a small 3% decline. I don't think I'd read too much into it.
Okay, all right. Deepak, I wanted to ask you about quite a few stocks, but let's talk about a couple of rare names that we normally don't discuss. Suzlon is suddenly up close to around 10%. Plenty of chatter, but I don't know what's going on there. They're talking about bringing down debt, raising fresh capital. If any view at all out there. And also the other one is Borosil Renewables. The management joined us on the show a few days ago, and they sounded optimistic that anti-dumping duty will get extended and the solar glass industry will be protected. Unfortunately, that's not happened. So that's what's going to raise some competition. The stock is down 3%, but it was down close to 5.5% earlier. Any view of any of these two stocks?
So we don't track either. Again, Suzlon, I think, I don't even know the stock price right now. It's, but I don't know anything that's kind of changed anything over there. With Borosil, I think the impression that the anti-dumping would continue was there, and we'll have to see how financials change now based on this. And in general, our biggest import in some of these areas is from a country where we're not trying to encourage too much of the imports in any case. So I think they might. I mean, they've done fairly well in the past, but let's see how they do now that this duty has been removed. So if I were to be considering buying them, I'd probably wait for this quarter's results before I took a longer term decision on this. But to be honest, the management has more or less delivered in the past. So I'm hoping that they'll do well now also. I don't have a position.
Got it. Deepak, hi, good afternoon. Kotak in particular, I know today is the FTSE impact, but it's not as if the stock had been doing well. In general, I mean, it's been an underperformer for better part of last 2 years. What to your mind is going wrong here?
Yeah, we own the stock, so I'm hoping that the going wrong part will come back, Anuj. But I think there's been a very large impact in general in banking. So if you see almost all banks, they seem to have underperformed, other than ICICI, which we also own, but the corporate banks seem to have done better than the retail banks. And I think here there's a bunch of things around competition that's coming from smaller NBFC lending through startups and through NBFCs themselves, like Bajaj, doing really well in retail lending. And also that their corporate franchises haven't improved substantially. 2 years ago, when RBI brought in a rule that said you have to at least be 10% of the lending of a bank, of a corporate, in order to be able to own a current account in that bank. So some of these banks, Kotak and HDFC included, because of their relatively rigorous lending standards, they aren't able to participate in some of the corporates' lending books at 10% level. So I think that might also have slowed them down. But I think the future ahead is pretty good for them. They have a fairly good franchise. Their CASA levels are fantastic in comparison with most of the rest of the industry. As a whole, the industry has 10% CASA, or 10% current accounts, 30% CASA roughly. These guys have much more than that. So I think that way they're poised for greater growth going forward. But then I'm biased. I own a position. I think they're one of the best retail banks around, is Kotak specifically. And they're more integrated. They have everything from the AMC to the insurance to all of the bits in the bank itself, rather than a holding company.
Okay, all right. Deepak, we want to talk about steel stocks. But before we get to that, DB Corp, do you track that? You don't track that one. The reason I asked you is because there was an asset that Adani Power bought from DB Power. And I think it's a similar promoter entity. So the way the street is reading it is that the promoter entity is getting stronger. So maybe some indirect support. Directly, I don't think there's much of a relation between the two. But from the word go itself, the stock was up close to around 15%. But Deepak, coming back to you with a couple of queries on steel. Now, the steel pack, they're in focus today on the back of a cautious note that came in from Credit Suisse. And they remain cautious. They also have an underperformed rating on JSW Steel and a neutral rating on Tata Steel. They believe that spreads are likely to revert to historical averages and also much lower than last year's peak. They see a risk to the regional prices with weak Chinese property data that's been coming out. They've also given 3 broad reasons. And let's start off with pricing. On pricing, they see a significant risk to domestic steel prices as they highlight that FTA prices have fallen by roughly around $85 per ton. And 50% of India's imports come in from these FTA nations. Now, Indian steel prices are now at a 19% premium in comparison to FTA import prices. That compares with around 2% historically. Additionally, they say that the European steel prices have corrected by close to around $40 per ton in the past 1 month, obviously on weakening demand. Now, point number 2 is that coking coal costs, that has been losing its way. It's come down from around 600 all the way to around 200. Suddenly, it's rebounded by close to around $70–75 on a per ton basis. Going ahead, that will hurt spreads. And finally, Chinese net steel exports, they continue to remain elevated. They're up close to around 27% on a year-on-year basis in July, which is a risk for global steel prices as well. The problem is further compounded because of the weak data that's coming out of China. Put all these factors together, and it seems to be having some bit of a bearing on steel stocks. Deepak, your take. Some of these stocks, to be fair, have seen a good recovery from the recent lows. But if international prices are going to be under so much pressure, China is going to be exporting more, then, this so-called turnaround structural story that could be playing out, well, it seems to have gone out of the window. But what's your take on these stocks?
I think you've pretty much spelled the dismal note in the near future, at least for these companies, because it may not be Chinese imports. It's Korea and Japan that are a bigger risk for India. And Russia's out of the game right now. But at some point, they could also come back in if the sanctions are removed or something like that. But Chinese exports, India's prices being way higher 15+% more than some of these other countries. The fact that these countries continue to provide subsidies to their steel exporters, which will bring the landed cost of steel in India at a much lower point. We have an export duty, not an import duty right now, I think, on steel. The prices on the stocks seem to reflect the higher EV to EBITDA or higher EBITDA expectation going forward. I think last year was an anomaly, and the higher energy costs that hit them earlier this year and will hit their margins now in a different way by lower revenue realizations because prices come down. So I don't think it's a good part to enter the steel cycle. Maybe when prices are at rock bottom and people are saying that it's the end of the steel story is when you should get back in. But I think I won't touch the steel cycle right now. I think it peaked earlier this year. I'm not been interested in steel since then.
Okay, just a word on the market, by the way. Just hit fresh intraday lows on the Nifty, 17,525. And this time it's not mainly because of banks. This time it's because of IT stocks. Infosys in particular is seeing a bit of a decline. And even look at Adani Ports intraday. That was one stock, in fact, the entire Adani group, which was sort of holding out. Yeah, there is Infosys. I think Adani Ports is the other one, which you may want to look at. Just all of a sudden, there's a sharp knock that you've seen on that stock. Tata Motors, Prashant, is the other one. State Bank of India. So across the board, and the market breadth today has been quite weak, actually.
2:1.
Yeah,
2.5:1.
Yeah.
In favor of declines. No, absolutely. So lots of names. Trent is down 6%. Look at Jubilant Food, and these are all big volume-led losses. India Mart is down 4%. Varun Beverages is down 6%. SAIL, Jindal Steel, of course. Godrej Properties is down 4%. Havells is down 4%. So they're the large listed, well-traded mid-caps that I'm talking about. Deepak, are there, if this is, of course, another round of selling, which maybe is not as sharp as what we saw back in June, but is meaningful, what would you want to buy in this round if it were to turn out to be, if you missed buying something that you wanted to in the first round? Many would have, right? What would be on your shopping list?
So I think, if they were to continue to drop a lot more, IT continues to be attractive, where we went off of some of the IT names earlier, but we're still starting to build back positions. I think that would be good. The banks themselves, like we've talked about, some of the, like the Kotak Bank and the HDFC Bank, I'm a little nervous because of this whole deal thing, but it's still if it were to fall 20-25%, that's when it'd be more meaningful. Some MNC companies with operations in Germany and India, where we believe that some of the operations will move to India or slightly start to move to India. They're not going down for some reason, whether it is Siemens or KSB or any of these companies. But I think they will be an attractive pick because the leverage and the relatively high difference between what they do in India and Germany can be quite impactful for the stock price if that moves. That's about it right now, but I think everything's come to a point where it's reasonably valued, not unfairly too low in terms of valuation. But we do have an interest in gold finance companies. I know that people have been saying people move to banks. My data says people aren't moving to banks. So, it's actually a point where some of these companies might actually get attractive from the NBFC sector. They're one of the few attractive NBFCs that are out there.
Okay, well, just one more word. Just put out intraday chart of IEX, this is one of the weakest stocks in the market now. Even in the entire market recovery, this is one stock which has not really participated as much and is still very close to its recent lows. And clearly, the market is worried about what's happening here. Platform company, Deepak, also a stock which sort of topped the list when we saw the valuation reset for some of these platform companies in the higher interest rate environment. Any view on IEX?
We used to own it. Very recently kind of exited this, waiting for a better time. I think it's a good long-term story. Valuations may be a little high right now, but I think there are some fears right now, even now. Although the recent thing that happened with respect to government telling states they can't purchase power on IEX or any of the open markets unless they pay up their past dues, and the fact that 80% of those dues were paid within a day, it actually augurs very well for the sector. And I think this might be an interesting play, even if it falls now or for whatever reason it is. I think longer term, this is going to be a very interesting story. Relatively or no debt, for it's got negative working capital in that sense, but more importantly that it's a platform where one of the most valuable resources will be exchanged. Players are institutional. Default risk can be curtailed by this carrot and stick approach that the government has. You might end up seeing this going up quite tremendously in a 5-year time frame, but in the short term I think it will do badly because of the valuation right now.
Okay, yes, valuation still perhaps a bit of a problem for IEX. We'll do one thing, we'll take a break. We'll come back, we'll discuss the way forward for the market and discuss portfolio bets with Nilotpal Sahai of HSBC Global Asset Management. Also the flashes on your screen, the money control exclusive, what happens to Rakesh Jhunjhunwala's portfolio and the trust, who will handle it. All those details are being broken by Santosh Nair from Money Control. We'll get some more details from him on the other side of this break.
Okay, welcome back. So 240 points. I mean, this is turning out to be a meaningful drawdown, absolutely. And volumes are also pretty decent, I mean, this Monday. So 17,523 is where we are at. Now, flashes, as we discussed before we took that break at the bottom of the screen in terms of what is essentially going to happen to Rakesh Jhunjhunwala's estate, I mean, his portfolio of investments in both listed and unlisted entities. My colleague Santosh Nair, of course, is reporting on this. This is information which he's put out. He's with us here in the studio. Santosh, tell us more. How is this going to work?
So, Mr. Radhakishan Dhamani, who was a friend, philosopher, guide to Mr. Rakesh Jhunjhunwala, he'll be the main trustee, and the other trustees for his estate, they include Kalprat Dharamshi, who has also been a long-term associate of Rakesh Jhunjhunwala, and as also Amal Parekh, with whom Mr. Jhunjhunwala has had an association for a very long time. So the estate trust will be these are the three main trustees, which we understand from sources is that Mr. Radhakishan Dhamani will have some kind of a veto power. So he will be the main person in that trust. And as for the other part, which is the day-to-day operations of rare enterprises, that will be run by his trusted lieutenants, that's Utpal Sheth and Amit Goela.
Okay, and Santosh, so that would include rare enterprises and also the investments in name of both Rakesh Jhunjhunwala and Rekha Jhunjhunwala.
Yes, that's right. That's what we understand from our sources.
Okay. In terms of management, so one is, of course, what you described is his investments in listed and unlisted securities. The other is rare. So the differentiation is already investments made and fresh investments and trading, right, etc., which happens under in rare.
Correct.
That's how it's split up.
Correct. That's how it's split up. And you know, this whole thing had been planned for quite some time now. In fact, sources say that it's been Mr. Jhunjhunwala was aware of his failing health, and in fact had taken steps as early as June. In fact, when there was a huge sell-off, it was the shares in which Rakesh Jhunjhunwala held a lot of shares which had seen quite a bit of sell-off, and at that point itself there was a lot of chatter as to why this sudden change in view, but that was part of the estate planning, in fact.
Okay, Santosh, thanks a lot for filling us in with all those updates. That's after the sad demise of Mr. Jhunjhunwala, how his portfolio will be handled. Deepak Shinoy is, of course, still with us. Deepak, let's discuss, in fact, one of his bets, Titan. What's your view on that stock now? And, for someone who's been invested, what's the call now?
I think solid company. So you don't, there's nothing wrong with the governance. There's nothing wrong with the business. It's, I always feel it's overvalued. So my views don't hold very well here because it's always been overvalued. But I think great business. Only thing is there is a bit of, there are a bit of regulatory nature of issues over here, whether it is gold import costs or import duty that comes in and changes their economics, mostly for the positive for them, but it could be the other way as well. And another is the nature of their business itself, which is, there's some part of the costs that tend to get, tend to be more fixed in nature. So when the price of gold fluctuates, their business fluctuates quite dramatically as well. So, but there's only a part of that business. I think overall, it's a great business to hold. I just feel, I just feel it is not valued low enough for me to enter. And I've said that for the last 10 years. So please ignore my valuation comments. It hasn't been very successful on that front.
All right, Anuj has mentioned about the Adani Group stocks. Pull up Adani Enterprises. That one is in all likelihood going to be the one that comes into the Nifty. If there is a rejig, normally it's done. It's already overdue, I think. You normally get it by the third week or the fourth week. That stock is moved to the low point of the day. But if my director can quickly pull up maybe the last 3-month chart of Adani Enterprises, then maybe we could compare it even with the Nifty or the mid-cap index as well. The stock is up close to around 40%. And I think the Nifty would be more or less unmoved in this period itself. So we get a dual chart, will give a better picture on that one. In all probability, going by the data points that are coming in, Adani Enterprises comes into the Nifty and Shree Cement exists. Let's see whether or not that does happen. But Deepak, let's talk about a couple of other names that you'll track. The cement stocks, last few days, a lot of traction. India Cement, Sanghi Industries. The Steve said maybe there will be competition, maybe there will be some kind of volatility in pricing, but they were factoring in consolidation, and that's why you had India Cements that ran up, Sanghi Industries ran up. How do you approach the space? As we speak, all cement stocks are lower. Even Ambuja Cements is down by close to 3.5%.
Yeah, I think today is just a route for everything in the market. But I think there's been a bunch of things on the back of reigniting infra and all that stuff. The fact is these companies can continue to remain a cartel and dictate prices to, I don't think there'll be any punitive action on them in any meaningful terms. So to a certain extent, the pricing will probably not go down, even if there are more players here. There is consolidation happening. Adani is taking over 2 of the largest. And there is capacity addition that's coming, but that's 1.5 years or 2 years down the line. And I feel maybe that's the bottleneck for the stock prices to grow too much. But they've come down also. They've come down from P's of 40 to P's of 20. I still feel they're overvalued. India Cements is probably the only company that has reasonably valued in this space. But I think, but again, that company, instead of having profits, tends to have losses also, as we've seen recently. So it may not be the best company to play this space. I would say I'd still wait for a reasonably healthier correction from here, get the P's into the teens, and then start looking at that space.
All right, Deepak, we'll let you go on that note today. Thanks a lot for joining us. Appreciate your time. Nilotpal Sahai is joining us. He's head of equities and fund manager at HSBC Global Asset Management. Nilotpal, hi, good afternoon. Thanks for joining us. We've seen a very sharp rally from the lows, but the last couple of days have been a bit rough. Your thoughts on how the market's position, just in the near term?
Thanks, Anuj. Yeah, you're absolutely right. The market rally has been quite sharp, up move. Whatever we lost in the first 5.5 months of this year, January to June 15, 16 or so, we recovered more than that over the next 5 weeks or 6 weeks or so. So the correction in the last 1 or 2 days is a very natural outcome of this fast and furious rally. Also, in this time period, we looked at the valuation chart when the market was correcting, and towards the bottom around the mid-June part, the valuations has come down to -1 standard deviation on a forward 12-month earnings for the Nifty earning companies. And here I'm talking about the consensus earnings. And from there, it has moved into the positive territory. That means almost between average to 1 standard deviation higher. So it was only natural that some bit of correction would have happened. Now, having said that, one of the important event, which is that the corporate results has been declared, and as it should be, the corporate results should be the key driver for the market, at least for a quarter or so. For a longer term, obviously, the structural factors are more important. Now, when talking about the corporate earnings, the first quarter result, and again, I'll be talking with respect to the Nifty companies. The results were kind of mixed. Expectations were very high, and by and large, the numbers were mixed. By and large, the number were met, but there were a few disappointments also. So on one hand, there was disappointment in energy sector, but financial sector did well. Within consumption, discretionary, especially QSR and retail, did well. But on the other hand, staples did disappoint. If we look at the broader set, then the top 3-4 heavyweights, so there was disappointment there, but the breadth was reasonably good, and 2/3 of the companies either met or exceeded expectation, and that means the breadth was reasonably okay. So I would call it actually the results were mixed, but nonetheless, at the end of the quarter, there was a 3% cut in FY23 earnings and 2% cut for FY24 earnings for the Nifty companies. But I must also point out that the sales figure, the revenue number, exceeded expectation, and those have been taken up for both FY23 and FY24.
Yeah,
I think
Mr. Sahai, we get your point in terms of the first quarter numbers. Now the question that we're getting, and street is a buzz about what do you do from here. At around 15,000 odd, valuations is relatively attractive. Now we have danced away to around 18,000. At these levels, I think you're a little overweight on banking names. Some of them have run up as well. So if you allocate fresh money, what do you allocate money to?
Yeah, fair enough. Yeah, and that is how also we think quite a few times actually, is that if I have to make a portfolio fresh, how should one think? Yet again, financial sector, and especially the large banks, would be my key overweight sectors, because not only the fundamentals continue to remain strong from the medium to longer term, but even in the short term, as I was pointing out, they were the key reasons for the earnings to hold up. And in the financial sector, actually, we have also seen the valuations are not expensive as compared to their history, what we are seeing in many other sectors. So to that extent, also, the financial sector is quite preferable. The other thing which has happened in the financial sector is that a bit of polarization, and the larger banks have gained market share. This trend we have been seeing for the last 2 years or so, and this trend is likely to continue. So that is definitely one sector that we will be positive on. The second one is a domestic cyclical company, let's say auto sector, which has been benefiting from the cyclical upturn. There was a downturn for 2 to 3 years, but now we are in the midst of the cyclical upturn. And in case of, let's say, PVs and the CVs, we are close to the previous peak. There were few issues with the sector in the past 6 months to a year, like chip shortage and the commodity price increase. Now they are also abating. And coupled with the fact that there would be a volume growth in this sector, we do expect the earnings to surprise. So that's the second sector that we're positive on. The other thing that would be quite positive at this point of time, again, would be the domestic cyclicals, and that includes cement, industrials, and selectively building material companies, because the earnings growth that we are talking about is still likely to be driven by the investment capex in the economy. So that would be my key overweight at this point of time.
Okay. I mean, the market, I think, is sunk to a fresh low, intraday low, yeah, I mean, it's what, 17,478. This just past the 3 p.m. mark, so there's 28 minutes to go to close, and we made a fresh low at this point in time. Bank Nifty also, I think, is doing something similar, 1.8 lower, so that is sort of reaching down. And the IT index is the other one, which has been a pain point, almost down 2 now, so 1.9 to be precise. So, so all sectors, at least the larger ones which were contributing to the fall, are at new lows of the day. Nilotpal, the last theme that you mentioned, industrials, you said cement and building materials. Can you talk about industrials and building materials a little bit more? Which segments there? Industrials also is fairly clear, but building materials, which subsegments, etc.?
Yeah, there are two small subsegments that we are quite more positive on, and that is the cable companies and the tile and the tile related companies, which goes inside, and of course also paints as well. These are the three sub-segments within the building material that we are more positive. And of course, I did mention cement as well. So cement is also what we are something positive on. This also comes from the fact that the real estate sector also has been doing well. There have been strong launches in the past, and the construction activity is also something that we are quite positive on. So these 3-4 sectors combined together actually makes us positive on the domestic cyclical.
And industrials, anything in particular there?
The larger names, basically, in the EPC construction and the larger names.
All right. All right, Nilotpal, we'll leave it there today. Thanks a lot for joining us. We're talking to you. Well, the market, just want to highlight that on the Nifty now, we're approaching a 300-point decline. So, I mean, if you thought Friday was bad, today is clearly worse. And today you've got follow through. It's now very close to that that level. The 20-day exponential and simple moving average zone will happen if we have another gap down tomorrow. And if you look at the Dow futures and the overall futures market, if you look at the European markets, it's giving you eerie similarity to what was happening in the month of June. I mean, of course, I'm not saying that we see similar fall, but at that time also, the market post that recovery after the Ukraine war saw that decline. The Nasdaq sort of topped out at the 200-day moving average, and this is very curious kind of a market. I know we keep saying that buy the dips and sell the rally kind of a market, but once the market starts to move in one direction, it sort of just does not look back. The same happened in June, and after that, from June to August rally, the market didn't give even a single reasonable dip. It just kept moving on. And in 2 days now, the Nifty has given up almost, a better part of 500 points on the Nifty, and on the Bank Nifty almost 1,500 points. So just that kind of a market. We'll take a break. Up next, we'll always, as always, get you a check from the dealing rooms in D Street Chatter. Nimesh is back, of course, from his leave. And BTST calls, buy today, sell tomorrow, lined up with our technical experts.
Hello and welcome to On the Record. I'm Shireen Bhan. My guest today is the CEO of a company that is the third largest pharma company in India. In fact, the stock has been an outperformer, up 8% year to date versus the pharma index, which is down 11% in the same period. The company has come a long way from the first big global breakthrough in 2001 when it introduced an HIV combination drug for less than $1 a day, a game-changing development for HIV therapy. And today, Cipla hopes to transform itself into a global healthcare organization with a sharp focus on strengthening its presence in the US market in the complex generics, peptides and respiratory segments. Well, to talk about the pipeline and Cipla's plans ahead, joining me now is Umang Bora, the Global Managing Director and CEO. Umang, always a pleasure. Many thanks for joining me here on the record. Let me start by asking you about the growth aspiration, Umang. You say that you want to position Cipla as a global healthcare organization. You've identified certain engines of growth, whether it's the wellness-oriented business, it's betting on new therapies, it's a diagnostic business, and of course your continued leadership in the respiratory segment and a focus on the US market. Of these, take me through the key milestones that you hope to achieve in the next few years. What's the roadmap?
Thank you, Shireen, for having me. And it's a very comprehensive question. Let me attempt to answer it. I think broadly, the 3 or 4 drivers for us. The first is just in this healthcare diversification. We see a lot of markets like India, but that also means that India will get the largest amount of focus in terms of the market that we want to create here. And what we're seeing in India is incredible amounts of deepening of the healthcare market into tier 2 and 6 towns. We are seeing a wave towards wellness. And both of these are opportunities that we want to capitalize, not just for India, but also for the rest of the markets across the world. So that will be growth driver number one for us, which is just the deepening of the presence of healthcare in India and the evolving consumer healthcare space. I think in the US, which is a very large market for us, we continue to see the benefit of our respiratory pipeline and our peptide pipeline deepening there. This is part of our core business. But at the same time, we're also looking at new innovation and R&D that can perhaps take us into new areas like biosimilars, into areas like the mRNA, and other areas and therapies, which frankly COVID brought to the fore more significantly than before. So that's the second area that we're looking at. The third area is a lot of the emerging markets, where we think that we might be at an inflection point right now, considering where the world's been in the last 2 years. I think things are beginning to bottom out for a lot of these markets. They've all taken a deep hit, and we see early signs of revival. So all these three parts of the world, I think the two big engines that are running is of course going to be innovation and maybe a large amount of deflation enablers such as digital in our business journey.
You know, I want to pick up on each of those, and let me start by addressing the wellness segment that you spoke of. And as you pointed out, you have aspirations of building that out even further. How much of that is going to be driven inorganically? Is that an active discussion that you're having with potential players at this point in time? And what would the size be of that business, and what kind of investments do you hope to make within that space?
So we have very large organic brands in the wellness space, and our objective would be to grow and deepen these organically first. Of course, inorganic is a part of the strategy. But I think if you look at just the depth of our organic brands, we have several brands which are 200 odd crores big. The total business right now is about 600 crores. We can see this business growing on the health side itself to close to about 2,500–3,000 crores over the next 5 years. So we are very bullish about consumer wellness. I think this is a business that will require us to be a lot more D2C oriented as well, in addition to creating equity for these brands with doctors and with patients. So we have large number of brands in the pain space. We have a large franchise in the vitamin space. We are the leaders in the nicotine replacement therapy. And over a period of time, we will create more brands in the cough segment. We will create more brands in the mom and children segment. And I think we feel very bullish about this category in India.
Okay, and you continue to believe that you will be able to enter these new spaces that you spoke of within the wellness space, mom and children, for instance, organically or inorganically? What is going to drive the growth there from the 600 crores currently to about the 2,500–3,000 crores that you aspire to over the next 5 years?
We think organically we can reach about 1,500 crores just out of the current portfolio that we have, or possibly even more than that. And the rest of it would come through new introductions in all these other segments that we spoke about. But also there would be an inorganic lift to this business too. We believe that out of the last 5 years or 7 years, we've demonstrated how to build bigger brands and how to experiment with these brands in different store formats, whether they are online or they are the offline grocer stores, offline chemist stores, as well as all the modern trade channels. So I think that's what's probably going to drive this. The doctor equity that Cipla has in the country allows us to brand our products and for them to be received appropriately by different audiences.
Okay, that's Cipla. Let's move on then. We have Nimesh joining us for D Street Chatter. Nimesh, tell us what have you picked up? The markets had a very rough day. In fact, second rough day in a row.
Oh yeah, second rough day in a row. In fact, in the last half an hour, 40 minutes, you've seen the selling just intensifying across the board. So that's a clear feedback. But overall, the feedback is it's largely global risk-off, which is having an impact on Indian markets as well. Within sectors, the two large sectors which are dragging the markets down today are financials and metals. Both are seeing some bit of selling pressure from the larger institutions. In fact, the Nifty bank index is down over 1.5% in today's trade. I guess in terms of flows, again, a mixed day. So there is no panic selling, so to speak, from the large institutions. But yes, there is a bit of unwinding now in many sectors and in many FNO stocks in today's trade. I guess that, again, the overall feedback is maybe another 200 points down from here. So close to 17,200 or below that, you'll see further pressure and unwinding as well. So no panic selling yet, but there is selling pressure across the board, and it's dragged by financials and metal names in today's trade.
I mean, Nimesh, good to have you back from the holiday just in time as the market starts to make a bit of a move on the downside. In terms of specific stocks, what are you picking up? What's the chatter?
Hi Prashant. So there are a lot of chatter and a lot of stocks which are in focus today. But the first stock on my list today is Jubilant FoodWorks. That's within the large cap names, down 5%, largely on back of strong selling pressure. So I understand that delivery volumes are going to be quite high in Jubilant Food today. So looks like one of the long only funds seems to be a big seller in Jubilant FoodWorks. So that's the first one. The second stock is Coforge. Within the IT names, most of the IT stocks are under pressure today, but Coforge stands out largely on selling pressure. Also, now there is a buzz of a large block deal again in Coforge. So, we saw what happened last week when $2 billion got sold by private equity, and now there is further buzz in many stocks, including Coforge as well. So that's the second one. The third stock is Sun TV, a rare outperformer in today's trade, up 2%, largely on back of buy flows. Remember, the numbers were strong, but again, in Sun TV, the biggest disappointment for the investors was the lack of clarity on the cash that they have on the book. So that still is a stirring point, but today it's moving up largely on buy flows at NFI. So that's the third one. And the last stock is Adani Ports. Everyone was surprised with the kind of move we saw last week in that particular stock. A bit of reversal in today's trade on back of profit booking. But I believe the management was at one of the institutional conference in Singapore last week, and they spoke very, very highly about the growth potentials for Adani Port and Adani Enterprise. And these are the two companies within the group which are well received by the investors as well. So that's the feedback that I have. And hence, Adani Port is part of my charter list today.
Okay, Nimesh, thanks a lot for that update. Well, the market is just trying to recover a little bit. It's, from the lowest point, just a bit of respite, maybe. Just some shorts, maybe booking some profit, if nothing. But just, no longer at the lowest point of the day. ICICI Bank is trying to bat for the bulls. Reliance, SBI. It won't show in the charts because, they're all beaten down. But from the lows, there's just a bit of a recovery which you're seeing. Mitesh Thakkar is back with us for BTST calls. Mitesh, go ahead.
Anuj, REC is something which is breaking down, and so is SBI. So while markets is now closer to the area which I would expect them to bounce back from, but I think some of the stocks are still showing signs of further corrections. So SBI is a BTST with a stop at about 5.6 for targets of 505, and REC is the other one, which is kind of, tapering off a bit. That's STBT as well. Keep the stop just above 104.50, which is 104.5, and a target of around 101.5, 101.4 tomorrow can be returned.
Okay, all right. Mitesh, thanks a lot for that. Well, Kunj Bansal joins us to talk about a few stocks. Well, Kunj, more stocks on the downside than the upside. It's not been a good start to the week. And that too after the fall that we already saw on Friday. So in a couple of sessions, you shaved off close to around 500 points. That said, there are a lot of stocks that are moving around. So let's ask you about your view on a couple of them. You have GNFC. That stock is down close to around 6% odd. I remember the stock was in focus, a lot of positive commentary coming out there. From the management as well. At around 720, any view on the stock?
Yes, so these are commodity-oriented stocks, and in fact, if I remember, the June quarter numbers have been very good. Probably the profit has been high in the order of 50% or even higher. I don't exactly remember, but I do remember that the number was very good. So these are commodity-oriented stocks. They will do really very well in a particular period of time, and then they will be the first one to fall also. When the market as well as the particular product whose prices they were banking on do not do well. So these are good trading bets. I wouldn't recommend them to the medium-term investor for whom now with this 2% correction in index, although in terms of Nifty 500 points look good, but let's be very clear that it's hardly 2.5% from the recent peak, which came on the back of sharp 15% rise in 1.5 months. But in that 2.5% fall, we already have other stocks 5 to 10% correction, let's say banking, let's say automobile. So I would recommend investors to focus there and add there instead of adding these commodity-oriented stocks.
Okay, all right, Kunj, stay with us. We'll just take a quick commercial break, come right back to you. There's 11 minutes to go for market closing. That bit of recovery is there. 250, 260 points lower on the index, so not quite at the day's low. We'll see. Just a few minutes to go for close. Kunj is with us. We take that break. We're back.
Welcome back. Well, the market's been down and out today, especially on the financials and the mid-cap index as well. 1:2.5 on advanced decline. Kunj Bansal is with us. Kunj, I wanted your thoughts on Jubilant Foodworks. Every time it's attempting a rally, it sort of fizzles out. Any thoughts here?
So in terms of thoughts, my view is positive. Of course, the stock at its low in June saw almost a 30-40% fall from its peak. And then it attempted the recovery, as you rightly said, and has again seen some selling. Probably there seems to be some institutional selling in and around the stock, and that's why it is a fall. The June quarter numbers were reasonably okay, and the management is in transition phase, as we all know. The company has already appointed the new CEO who will be on board soon, and we will get to hear from him. And there's no reason to feel concerned given the high growth business. Whoever comes will try to take it to further highs. So irrespective of the fall which has come today, could come more, because if the market continues and if there is some selling which continues, we can see some more fall. But the view continues to remain positive. Any fall will in terms of valuation, the stock has always remained expensive. But we have seen sharp consumption recovery, in fact, in terms of eating out more than the order in. So that both of these trends are likely to benefit. So net the view remains positive.
Kunj, Nimesh was with us earlier telling us what he's picking up from his conversations. He was saying maybe a little bit more, 300 points, maybe more on the downside before things stabilize. Any thoughts at all, near-term markets? Or, if you have a bigger view, some people do that maybe this is the start of something bigger. Any thoughts at all?
Yes, so my thought is that let's put few things in place. We saw a sharp 15% rise in large cap indices in a very brief period of 1.5 months, number one. Number two, the 2 days correction looks like, oh, what has happened? 500 points Nifty has fallen, but it's mere 2.5% correction. In fact, I would be happier if we see some more correction because money has just started to come in. And my assumption, or if I take an assumption that global money would want to continue to come in, then it will be more happy, the money or the investors will be more happy coming in a consolidating market, in a corrected market wherein they get good valuations. So for me, coming to the larger trend, I think it has turned positive clearly given the way. So we of course saw again oil prices trying to move up from the lows of $90 odd that they had fallen, which is a negative trend. But net the trend looks like will continue to remain negative. For metals, agri commodities, we have already seen the trend continuing to remain negative. And we are in festival season in terms of demand. So that should pick up. Monsoon has been reasonably okay. So that has already improved rural sentiment. So, and when does the risk doesn't remain in the market? So we still have Taiwan risk. I was already talking of oil price. If it starts to go up, we still have that risk. But to me, with the inflation numbers coming in, showing it's starting to downtrend at this point of time, positive factors are looking more, or rather not looking, are higher than negative factors on the market. And as a result, with this correction, some more correction, I would be happier. Money will come in and medium-term trend will become more positive. So for me, I don't think this correction is a matter of worry.
Okay, all right. Kunj, I wanted to ask you about PI Industries. One of the rare stocks that are in the green. Anuj has mentioned, I'd explained the piece as well. It's one of the big multi-baggers of the last few years. Last year, it fell to around 2,300 odd. In comparison to that, the stock has given you more than 40% returns as of now. It's almost at its 52-week high now. What would you do with it at around 3,400?
So with the disclosure that about a month ago or so, I sold my holding in this stock, but the view remains positive, irrespective of the fact that the stock is at a 52-week high, which obviously would look, valuation look expensive. In fact, if we go back to the June quarter numbers, they were also very good, more so from the export-oriented custom synthesis business, which continues to do well. The domestic business growth, I think, was not there or was in low single digit. I don't exactly remember, but nonetheless, on a net basis, the company continues to do well. In fact, the management also announced in its call that they'll be looking to launch 2-3 new products, again, more in the export market, because that is where they see high growth. So yes, one would want to buy it at any correction, but even if it doesn't come and if one wants to buy good quality stocks, one should nibble it for some part of the quantity now and keep it in the radar for any correction. It's a very good company. You have already mentioned that what kind of multi-bagger return it has given over the 2-3 year period, over 5-year period, over longer 10-year period. So I don't think, I mean, there could be cyclical issues here and there, but nonetheless, it's a very high quality management, very good business model, excellent financials with expensive valuations.
Okay, Kunj, thanks a lot for joining us. Have a good evening. Let's start wrapping up the market action for the day. Instead of just rattling individual names, just want to highlight that the Nifty was down 265 points, which is 1.5%. Just to put things in perspective, on Friday we were down 200 points and it looked ugly. Today it looked uglier. And if you look at the Bank Nifty, that's the one which has been dragging the market. Almost 2% decline on intraday basis on Bank Nifty today. And we are closing very close to the low point of the day. As I said, not too much point talking about individual names across the board. Everything was down, but just to highlight few stocks which dragged the market. Larsen and Toubro, for example, all the big financial names, whether it was the HDFC Twins or ICICI Bank or Kotak Mahindra Bank or Axis Bank, all these stocks dragged the markets quite a bit. But the real story was that it was a very rough day for the market. And the big question is, has the market seen a bit of a halt? Prashant, the broader market also was down. I mean, almost 3:1 declines to advances today. So Trent was down 6%. There's Jubilant Food, which we discussed, 5.5% lower. Info Edge was down 5%. Varun Beverages was down 6.5%. All on big volumes. Jindal Steel was down 5%. Coforge down 4%. IndiaMart down 4.5%. There's Adani Transmission down 5%, GNFC down 5%, Havells down 5%, Godrej Properties down almost 5%, Chambal Fertilizer down 4.5%, Happiest Minds down 4.5%, GMDC down 5.5%, Intellect Design down 4.6%, PB Fintech, Policy Bazaar down 5.5%, Dwarikesh down 6.5%, EID Parry down 5%, and I'll kind of stop there because that's the bulk of the volume-led losers list. There's more, but not backed by the kind of volumes that I spoke about with other names at this point in time. Nigel, but we had, I mean, advanced decline, of course, hugely in favor of declines, but nevertheless, we had stocks up as well.
Manic Monday for the bulls then. More number of stocks declining than advancing. The ratio favored the declines closer on 2:1 odd. The Nifty goes home below that 17,500 odd mark. Even on an averaging basis, I think we'll end below that. The mid-cap index took a harder knockdown closer on 2%. And the Nifty Bank, that was the flag bearer of this market today. That as well put its leg off the accelerator and was down closer around 660 points. So we've seen a correction in the last couple of days. Let's see whether or not we're bracing for a bit of a bounce. It's expiry week, remember, so things will get rather volatile. Though we'll have to wrap up on this edition of Closing Bell, but you don't go anywhere. On the other side, we'll discuss what should one do for effective personal budgeting on our Monday special, Money, Money, Money.
Powered by LIC, हर पल आपके साथ।
वाह डॉक्टर साहब, आप तो जीनियस हो। अच्छा, शेयर कौन सा लूं?
सही सवाल, गलत जगह। सही जगह है ग्लोब कैपिटल, जहां पर आपको मिलेंगे अवार्ड विनिंग